Welcome to Club E. Hi, I'm Rick Brimacombe of Brimacombe and Associates. I am your architect of business growth and will work with you to unlock your potential and amplify the scale of your company. Today, we're talking about commercial banking. Before we get started, I want to thank our sponsors, Irish Titan, an e-commerce and web development firm. Hope you're all amped up for the big shopping season that's upon us. Boulay Group, CPAs and advisors, with all the PPL info and the EIDL loans. I hope you're talking to your accountants for the year-end tax planning. Highland Bank, a locally owned community bank, and Melissa Johnston is our speaker. We'll get to her in a moment. Romaine Berg, a digital marketing agency. Voyager U, training resources and a community for you to launch your independent career. You can learn more about them in the courses section of Club E. Projection Smart, providing software and growth software and financial tools, which, ironically enough, you can learn more about in the tools section of clube.com. All right, hit the subscribe button so that you can keep track of what's happening with Club E, and we can notify you as to when we are going live. You also can watch on your favorite podcast platform the Club E sessions, whether it's Apple, Google, Spotify, Stitcher, or many others. We now are also in the podcast format, so you can listen to us there. All right, as I mentioned, Melissa Johnston, Senior VP at Highland Bank, is our speaker today. Welcome, Melissa.
Hi.
Welcome to our show. Melissa's email address, that's melissa.johnston@highland.bank, can be found in the comments field of the video. You also can submit questions and we will work those in to the extent that we can. Melissa, let's get started by just having us tell us a little bit about yourself, your background, what you do, and then the various other things that you're up to.
Sure. Thanks, Rick. Thanks for having me. As a banker, I like to say I'm in the dreamer's business, helping people realize their dreams of buying a business, starting a business, buying real estate, purchasing equipment, helping them make their dreams come true. These days, I'm also working more closely with owners to keep their dreams from shattering. 2020 has been a tough year on all of us, and we've definitely had our share of opportunities and challenges to be involved with. Outside of my paying job with Highland Bank, I serve an appointed position as Vice Chair of Minnetonka's Economic Development Advisory Commission and a member of Crescent Cove's Philanthropy Committee and Speakers Bureau, a member of Drivetrain for my church, and coach for my kids' sports, along with various task forces that come up at my kids' school. So lots of free time.
And then I know that you were active in sports growing up and college and so forth. What sports are you involved with now with your children?
Yeah, so it depends on the season. We try not to overlap too much, but with these days, club sports and other things, it's hard to prevent that. So we were in the thick of basketball season, gearing up for what would have been our first tournament last weekend. So now we're switching like everyone to online, and I'm working on developing some Zoom workouts for the kids.
All right. A little challenging, I'm sure.
A little bit. Mm-hmm.
Yeah. Hey, on the personal front, and you didn't mention it, you grew up on a family farm. Talk a little bit about that and how that prepared you for your business career.
Yeah, awesome. So yeah, I grew up on a farm, and my mom and I laugh when she tells me about me as a child. So I'm the oldest of three girls, and my sisters and I would play together. We didn't have neighbors very close to us, and I had my cousins, but the three of us played all the time. And so my sisters would play house, and they'd want to play school, and I always wanted to play business. So my mom says that I would, in my stereotypical oldest child voice, you go get the milk and you go get the cookies, and we're gonna talk business. I didn't really know what I was talking about, but at a very young age, I knew I wanted to be in business. And I also learned to work hard. There's always something to do when you live on a farm. My dad raised hogs and crops. And so there was never a day where we couldn't make sure that the pigs had food and water, and also learned discipline and focus. They were ingrained early on. Even on Christmas, frankly, my dad would say, the pigs don't know it's Christmas. We still got to do our chores. And I always had to pay attention to what I was doing and make sure I wasn't in the wrong place at the wrong time and end up trampled by a hog or ran over by a tractor.
Yeah.
So, and on the business side of farming, my dad really taught us that there's things out of your control, such as the market, the weather, many of your input costs. So you have to anticipate challenges, to be resilient, and always have a cushion for when things don't go quite as you planned. And then with my dad, I witnessed the importance of relationships. The banker would come over, have coffee with my dad, tour the farm. They'd talk about the market, talk about family. He had a similar relationship with his suppliers, the co-op, the veterinarian, and I really witnessed the sense of community and connection. And that's what I've come to love, frankly, about community banking. Working for a family-owned bank, you can truly take your time, getting to know your clients and what matters to them. And I have a deep relationship with my clients that extends beyond banking.
Yeah, and that family upbringing, the birth order, the early business stuff, the sports, the discipline, watching your dad interact with the banker, all of that sounds like a perfect practice field, if you will, for the banking world.
Yeah, it really was. I mean, it's amazing to think back, as you grow up, what signs sort of lead you to your career. And I mean, even simple things like play Monopoly. I was always the banker, doing a class fund. I was always the treasurer, those types of things. It was just keeping track of money. So many things growing up lined me up to be a banker.
Mm-hmm. And then I've known Rick Wall, CEO of Highland Bank, for 30 plus years. Highland and you, Melissa, have been very supportive of Club E for a number of years. And then I've also been on the bank's board. So I've seen firsthand what a good place it is, a good place for business, a good place in being supportive of the community and being supportive of the employees. So how long have you worked for the bank?
It has been over 9 years, coming up on 9.5 years. Mm-hmm.
A lot of ties there to your family roots. So
yeah,
thanks for sharing us a little bit about that. Hey, as we shift gears towards our topic today, commercial banking, what are some of the key considerations for choosing a bank to do business with?
Yeah, thank you. And I think just as important as choosing a bank is choosing a banker. It's critical to know both your bank and banker and make sure that they understand your business. I talked with my client in the service industry who moved over from a different bank to Highland, and he mentioned how refreshing it is to have a banker and bank that really understands his business, the way his accounts receivable work, the delivery discounts, project-based nature of the revenue cycle. If you constantly have to explain to your bank how your business works, it can be really frustrating, and your bank probably won't be very good at anticipating your needs and helping you work through tough times. For small to medium-sized businesses, having a bank that's local in nature can be helpful. So you can actually meet with people and talk through sensitive issues and challenges, although meeting in person has its own challenge at the moment. If you're an SBA candidate, working with a lender that knows the in and outs of the SBA program is critical. you don't want to get down the road and then learn some nuance makes you ineligible for an SBA loan and unable to obtain the financing when you need it. And then I would say knowing what the bank's target client is. I've heard from smaller businesses that the larger banks often aren't supportive or aren't as supportive as community banks. So the bottom line is it's important to find a banker that you believe will truly be a champion for you within the bank.
Absolutely. And you mentioned a couple of different things there. SBA, and then I know also Highland was very active with the PPP loan program. So maybe just touch on Highland's involvement with the SBA and the PPP loans.
Yeah, I think, you know, if you know or think you may be a candidate for a government loan, knowing if the bank participates in government programs is helpful because not all banks do. I mean, pretty much every bank participated in the PPP loan program, but there's other programs such as now the Main Street loan program and other things that could be helpful to you. As it relates specifically to PPP, I really have to give kudos to our SBA manager. I mean, Kim's story from the very beginning was attending all the webinars, the teleconferences, was just really dialed into what we needed to do. And we were ready to go. I mean, she expanded her team from 2 or 3 people to 9, basically overnight, with people on call to help her. And the bankers, we really just served as a conduit between the client and our SBA department. They were amazing. Our internal SBA team. I mean, the anguish and frustration and anxiety that our clients felt, and frankly, other business owners too that weren't getting good communication from their bank, just being able to walk alongside them through that PPP process felt really good because it was really a tough time, and our SBA process on the PPP side was really well thought out and put together, and I'm really proud of that. Mm-hmm.
Yeah, and very successful relative to a bank your size. So congratulations on doing that and serving your existing customers as well as the new ones that found their way to Highland Bank. All right, so let's say I'm a business owner and you and I have a meeting coming up, and I'm trying to prepare, get ready for it. We're going to be talking about some sort of a business loan. What information should business owners out there provide and include in that meeting?
Yeah, that is a terrific question. So when asking for a business loan, first and foremost, the bank is going to want to know what you're going to use the money for. Banks aren't too keen on just giving out walking around money. So having a really good understanding of what you're asking for and what you're going to use the money for is important. And then the bank will want to review both business and personal financial items. So on the business side, banks typically want 3 years, historical, fiscal, financial statements, along with interim financials year to date. So that would be a profit and loss statement, balance sheet, accounts receivable, accounts payable. And from an interim standpoint, they may also want to see the same period the previous year. So for example, we're in mid-November, so September numbers should be updated, and the bank would want to see year-to-date September 30th, 20 numbers, and then September 30th, 2019, so they can do comparison. The bank's also going to ask for a forecast of what you think year-end is going to look like. Sometimes there's items, between the middle of the year to the end of the year that may disrupt the financials or may present a growth opportunity that the bank wants you to be prepared for. And then the bank's going to ask for projections or a budget for the following year. So again, there could be something on the horizon that would warrant some additional capital, or maybe a contract that you aren't going to have for the following year that just needs to be planned for. And so the bank's going to look at your requested financing and then how that overlays with historical trends and patterns. So one of the questions that came in ahead of time was, are there any red flags for banks to turn down a request? And we could do a whole separate episode on this. There are a number of red flags, but I'll address the biggest one, which is 2 out of the last 3 years with negative cash flow, or year to date, significantly negative cash flow. So over the last 3 years, when the banks look at the numbers and you've only had 1 year positive cash flow, that's going to be really tough to obtain any bank financing. With 1 year of the last 3 of negative cash flow, that can be an okay situation. Typically, there's some extraordinary items, maybe an inventory write down, or you bought out a partner, or there's a bad debt. So being prepared to talk through some of those extraordinary items. I was working with someone who wanted to get a loan for a new location, and 2018 revenue was way down from 2017. And when I asked him about it, he didn't know. Oh, I don't know. I'll have to look into that. So it's just those kind of things, if something within your financials, there's some trend that isn't really on par, to just be prepared so that you can talk through the downturn or negative cash flow with your lender. Then if you have any seasonality in your business, the bank's going to want to make sure you have adequate reserves to get you through the low times, and then access to necessary capital when things get busy. So we have a number of clients that have seasonality. And then on the revenue side, the bank's really going to want to know how you make money, understanding your uniques. For example, if you're a marketing company, they may want to talk through how you get paid, the nature of the contracts, what you need to pay in terms of accounts receivable. If your business is a startup, you're going to need to walk through the business plan with the bank. If you're a startup and you haven't put together a business plan, you're going to want to do that before you talk to a bank. And of course, there's a lot of resources for that.
Sure.
And then on the personal side, there's some items too, but maybe you want to ask a question first, Rick.
Well, I got a couple of other questions, but one, you mentioned the business plan, and I guess when folks are raising money, there's different kinds of business plans. There's the 1-page business canvas. There's the 50-page dissertation. When you say a business plan, what does that mean to you, and what do you think is the best business plan for your purposes for a business owner to bring you?
Yeah, great question. So the SBA's website, sba.gov, has a template for business plans that is really well done. Frankly, that's what I would start with. You could also work with SCORE. They'll work with you on getting that set up. But it's really outlining, what the nature of your business is, how you're going to make money, and spending a good amount of time on the financial piece, on your total expenses, and not just your P&L, but what your cash flow is going to look like. Oftentimes, the profit and loss isn't exactly lining up with the cash flow. And then in terms of your marketing strategy, how you determine a need for what you're going to offer. A lot of times people just say, I'm going to capture 0.3% of the market. Well, that's not helpful. It's like, how have you actually determined it, and what have you done from a study perspective, a market study perspective? And then, your people, who's going to be part of your business, what their roles are going to be, the operations, really just, it's probably, from a length perspective, 5 to 12 pages of well thought out narrative on top of the financial piece. Mm-hmm.
Okay. And flip it around, put yourself in the shoes of the business owner. Are there questions that the business owner should ask the banker about the loan process?
Yes, definitely. So I recommend trying to find out as much as you can about the actual process within the bank, specifically when they're going to know the loan is formally approved and what the terms are. Banks have many approaches to this. Some banks will give you a term sheet and then go to underwriting, and 4 weeks later you'll get communication back that says the loan's approved, but the terms are different than what was communicated on the front end. And so really asking the question in terms of who's involved in the decision and when the deal will actually be final can help prevent some anguish along the way. Again, banks have different approaches on how they handle that with their loan committee and approval process. And I recommend asking the banker if there's a checklist, as I was starting to talk about some of the things that we look for. Banks have their checklist of all the items that they're going to want to see for underwriting. And so it may be where they have a certain amount of items they want to determine the green light. And then they have kind of the second round of items that they'll want for underwriting, which includes all the personal tax returns, the Schedule K-1s, that information. And then there's kind of the third round, which is the organizational documents, the insurance. And so you don't want to find out 3 weeks into the process, 5 more things you need to provide to the bank, and then your loan stalled out because you're looking for your organizational documents, you're looking for the value of your home, you're trying to find some copies of liquidity statements, those types of things. So getting that checklist up front is going to help you save time. And then other questions to ask when it comes to loan terms, finding out if a business valuation or appraisal is required, and knowing how that valuation may change the loan amount that you qualify for. Asking about the loan term and amortization. Obviously, the longer the amortization, the lower your payments are going to be. If it's a line of credit, you're going to want to know if your advances would be restricted. A lot of times, if the line of credit's over $500,000, it's going to be subject to a borrowing base. So you're going to want to know what's eligible in my borrowing base. How often do I have to provide a certification, and those types of questions around the line of credit. Of course, the fees, what the third-party fees are going to be, legal costs, filing fees. You're going to ask if you can pay the loan off early without penalty, what you'll be required to pledge as collateral, what happens if you default on the loan, what options do you have to cure it, what the covenants are. Banks like to put in cash flow coverage covenants, sometimes debt to worth covenants. So understanding what sort of construction cones are going to be set up around your financing. And then financial reporting, how often your bank's going to want to see financials, monthly, quarterly, the quality of those financials. Then of course, everyone always asks what the interest rate's going to be.
Of course.
Mm-hmm.
Probably lead with that one, I'm guessing.
Some do. Mm-hmm.
Yeah. Hey, just a reminder to our audience out there, hit the subscribe button. Again, you can get a hold of Melissa at melissa.johnston@highland.bank. It's also in our comments field, and you can submit your questions in the comments field. We had a couple come in ahead of time that we've woven into our conversation here today. But if you have questions out there, please send them our way. We will try to cover it in our conversation. We have not gotten into the weeds at all about COVID in the terms of the impact. I know from my own kind of perspective, I guess, with the portfolio companies that I'm involved in, and then other investments been looking at. First thing that we did with a couple of companies that we thought were going to be hit pretty hard was the 13-week cash flow. And then two of the things that have come up for us would be that customer concentration issue, and really being aware of that and any challenges that could bring to the business. And then supply chain, single point of failure, with issues either with what the company needs for the product and or the service to deliver to their customers. Those have been a few of the hot buttons for us. How has COVID-19 impacted the bank's loan process, if at all? And how has that factored into your decision making?
Mm-hmm. Well, I'll just say +1 to everything you said, of course. In terms of the process, our process really hasn't changed. It's just asking the question. I mean, one of the first questions we're asking right now is what's the COVID impact? And in most cases, COVID has had an adverse impact on companies. In some instances, COVID has presented some opportunities. So figuring out how the pandemic is influencing the business is a big part of the underwriting piece. If COVID has negatively impacted business, we look at earnings. Are earnings just down, or is the business actually losing money? If the business is losing money, we try to figure out what the anticipated hole will be and when the owner expects to return to profitability, which I agree is anyone's best guess right now. But trying to forecast out profitability and cash flow, and then analyzing the amount of liquidity the owner has on hand and sensitizing if that's going to be enough to weather the storm, in combination with some level of debt that we may present, and if they can service those payments on an ongoing basis. So we look at whether the business may need to adapt in any way and discuss the steps that need to take place to do that. For example, I have a client in the event business and they've been crushed. So after the CARES Act payments were made, we're now working on deferring payments for them, loan payments, and then trying to figure out how to right size their debt so they can afford them until trade shows and other in-person events have come back. So if COVID has presented some growth opportunities, as in the case for our clients in the e-commerce and freight brokerage and some of the food industries, we're working with them to make sure they have enough working capital to grow. And of course, this isn't a science. So it's a lot of forecasting, scenario planning, and then an ongoing dialogue with our clients. Yeah. The good news for folks that are looking for loans is that banks are still lending.
Yeah, that is good news. Yeah, very good. And then as far as like the business issues, and you've covered some of these, but just as a reminder and also to be helpful to the business owners out there, what are some of the most common business issues that you see? And then maybe are those any different given the post-COVID world versus the pre-COVID world? I know lots of times running a business, because I hear it from the CEOs I interact with and invest in, it's lonely. They feel a little bit by themselves. And if they're experiencing problems that you see fairly commonly, then that might be, I don't know, comforting to them, if that's the right word. So what are some of the common issues that you've seen either pre or post-COVID?
Sure. Yeah. Well, unfortunately, I think businesses are getting hit with about everything right now. Nothing surprises me anymore. And across the board, and I surveyed a few clients just going into this talk, the work from home model is an issue. And it can work for most white collar jobs, at least for a while, but doesn't work for all companies. Manufacturing companies, they need to be in the building. Everybody's saying their employees' safety is their top priority right now. So just trying to figure out how that can work during a pandemic. I hear from my clients that maintaining their positive culture has been really difficult with the work from home model. And I know we've certainly tried to address it at the bank. And then you mentioned earlier supply chain. I mean, supply chain is definitely a big issue. Just think about as a consumer, when we go into a store right now, whether it's a grocery store, retail store, and we might see a couple shelves empty, And think about how weird that would have been back before March. Now it's, you go into the grocery store and a couple shelves here and there aren't stocked, and it's just, oh, that's just the way it is. And so, yeah, like I said, there's been so many business issues. We could devote a whole episode to this as well, but the positive culture, the working environment, supply chain definitely are bigger challenges than pre-COVID. Prior to the pandemic, I would say most of my clients' conversations were around finding and retaining talent. That was their biggest issue before. Mm-hmm.
Yeah, I've heard that one too, about the finding and retaining talent, at least pre-COVID. Some folks are still facing a little bit of that now, but it also depends on who they're looking for and the slots they're looking to fill. Had a question come in from Rob about liquidity metrics for measuring the business, assessing the business, and then monitoring the business. What are the key liquidity metrics? And again, next question's from Rob.
Yeah, thank you. So, I mean, the most basic way is just positive working capital, current ratio. Are your current assets greater than your current liabilities? And seeing that in kind of a 1.2 to 1 threshold. So we want to see at least 20% of a current ratio on top of your liabilities. But it so depends on the industry and the nature of how you operate. There really isn't a science to it. It's really just going through the monthly cash flow and taking a look at that. We also look at the debt to EBITDA ratios, making sure that your debt isn't going to outpace your EBITDA and some of those types of things. But it's not a science. I wish it was just strictly by the numbers and folks could line that up, but it depends on a lot of factors. Mm-hmm.
Is there a range of the debt to EBITDA that is healthy or manageable from your perspective, or is it really case dependent?
Yeah, it's really case dependent. I mean, we would say that anytime that your debt is over 3 times your EBITDA, you're considered leveraged. I mean, that would be a good amount of debt. So we want to see that debt to EBITDA being under 3 times. Mm-hmm. Okay.
So a little bit of a challenging question in that I'm going to ask you to look into your crystal ball. What does the future of business banking look like? Where do you see it going? What role do you see technology playing? What does your business look like in the future?
Yeah. So with the high pace of technology and technological advancements, I believe we'll see less and less local options for banking. It's also been extremely hard to succeed as a small bank. So I think the march towards consolidation will continue. Some banks are already completely online. I'm sure folks have seen that. Both highly regulated and less regulated companies are giving loans. And it comes down to really who you want your financial partner to be. There's both the lending side and the payment processing and cash management side of a bank. On the lending side, smaller business loan requests will be made and serviced more and more by online lenders. Some non-traditional banks are using API to make their lending decisions along with metric-based platforms. And I think this will continue to grow. Convenience comes at a price though. So if you don't hit those metrics, you don't fall perfectly in the black and white, you're not going to qualify for a loan. On top of that, the interest rate's typically higher. And when it comes to technology, it doesn't understand everything that goes into the lending decision, such as an owner's experience, family history. I don't think these types of banks are also really interested in working with people in a loan default situation. I believe most business owners still want a relationship with their financial partner. someone to work through opportunities and challenges, be a resource for them rather than calling a 1-800 number. So I think actual people will remain part of the lending process, at least for loans greater than 500,000. On the payment processing side, the US currency is already largely digital. I see continued increase in the acceptance of digital currency, cryptocurrency, less physical card presence in the future, more and more people using their phones for everyday banking. I believe AI will continue to play a role with voice command and fingerprints versus PINs and passwords. Some people continue to avoid technology. I have clients that avoid it. And banking will remain fast, safe, efficient, even for those people. I believe that even into the future, banks will continue to be an integral part of the payment system.
Yep, absolutely, absolutely. Okay, another crystal ball question here. Will the election results impact the business banking world or lending? And then do you think the election results will change the regulatory environment?
Yes, this is a good question that I need to answer, but I need to answer carefully because internet trolls love grabbing onto this stuff. So personally, I think the split in the House and Senate, any changes will be tempered. I'd like to see them come together on another stimulus package. The virus continues to cause problems across the US, and I think a well thought out stimulus package would go a long way. I can make some educated guesses regarding how Biden will approach banking policy based on what I've read and historical context. It appears numerous issues rank higher on Biden's agenda than banking. He also seems to be surrounding himself with advisors from different parts of the ideological spectrum. Could bring a balanced approach. We all know President Trump's tax reform reduced corporate tax rates from 35% to 21%. And Biden has indicated he plans to bring the corporate tax rate back to 28%. So that will impact how banks underwrite its corporate clients from a cash flow standpoint, pro forma cash flow. I don't believe they're going to undo the Dodd-Frank rollback, but it's obviously too early to tell on that. Joe's vision on his website doesn't list banking directly. So I feel that unless banks become financially unstable or a destructive behavior pattern emerges, I doubt Biden will push for many changes specifically targeted at banks. When it comes to historical context, I was a lender under the Obama-Biden administration when we were in an economic downturn, and the SBA rolled out a stimulus for SBA lending where they increased the guarantee percentage from 75% to 90%, and they waived the SBA guarantee fees in an effort to spur business spending and activity and lending. And so I haven't read anything, I haven't seen anything that's being contemplated. That's just historical context. Our SBA director attended a SBA conference maybe a month ago where they discussed an extension of the CARES Act payment on SBA loans, and they discussed a second round of PPP loans. But I haven't read anything on this, so we shall see.
All right. How, if the taxes were ratcheted up, would that be a significant input and impact on loan decisions, or would that be more of a moderate input and have a moderate impact on loan decisions? Of course, you're hypothesizing, yeah. And if there's internet trolls out there, this question is not for you. This
question represents my view and not of Highland Bank. I would say, first of all, the tax rate wouldn't impact the loan decision because you're taxed based on your profitability. So without profitability, no taxes, no loan. I mean, if you're profitable, the impact is just trying to figure out how much excess cash flow you're going to have and kind of setting up coverage ratios and covenants around that. So it's not going to impact, I don't see it impacting loan decisions from a yes or no standpoint. It's just from a forecasting standpoint, how much cash is going to need to be reserved to pay taxes, and understanding the type of entity, C Corp, S Corp, LLC, the tax impact is different, obviously. So it's really only on the corporate tax rates. So it's not a big issue or underwriting item. It's just an example of something that may change that we'll need to take a look at. Mm-hmm.
Okay. As we aim towards the finish line here on our talk today, and thank you again for joining us. If there was kind of one key takeaway you'd like the audience to have, whether we covered it and you just want to reiterate it, or if it's something that we didn't get to, what would be the one main takeaway that you'd like the audience to have?
Yeah, I would say your banker can help you out in so many ways. So be sure to find a good one and include him or her in your circle of trusted advisors. When you're facing opportunities and challenges, also a bigger name doesn't always mean more support. Sometimes the smaller the bank may provide an overall better relationship for you.
And for folks that were wanting to find you, how would they do that?
Sure, yeah, LinkedIn. I'm on LinkedIn, quite active there. I have other social sites as well. Email is good. And then I'm on the Highland Bank's website too. So my direct phone number is on there, and you can email me directly from the Highland Bank's website, just highland.bank.
Highland.bank. All right. Thank you, Melissa, for joining us today. Appreciate the insights. Everybody's always interested in knowing how they could have a better relationship with their banker. So thanks for sharing some of your insights and perspectives there. And I hope you'll join us again.
Absolutely. Thanks for having me, Rick. It was a lot of fun.
All right, great. Thank you.